Alright, what is up, guys? So, I'm gonna do a completely uncut video. I don't like fucking edited videos. I like when people just yap. That's how I learn. So, that's exactly what I'm gonna do for you right now. Now, first of all, you might be like, what's on your screen? What is all this? I don't understand. So, this is a program that I use. This is called TC2000. Now, for actually placing trades, I use Webull. So, that could be on my phone. That could be on my computer. Most of the times, I just do it on my computer. You guys should know how to place trades. You should know what candlesticks are before you watch this video. You should know how to place a trade. But I'll show you guys pretty much everything. The only thing I won't show you is going to be candlesticks. I'll show you how I place my trades too. Um, but yeah, let's just get right into it because I've made millions of dollars trading. I'm 22 years old. A lot of people think it's bullshit. I honestly don't care. If you think it's bullshit, I know what the truth is, and I know how I got a Lamborghini because I got a Lambo downstairs. I got this diamond watch on. Like, come on. Anyways, so when it comes to making a shit ton of money trading, you don't need all this stuff that these people say. They think that they tell you that you need to day trade, you need to use prop firms, you need to have a high win rate, you need to have all this shit, and you really don't. So I have a win rate of about 35%, and I mean that's even in a good market. Sometimes I go on streaks where I'm winning like 90% of the time. Sometimes I go on streaks where I'm not winning at all, like recently. But that just gives me more time to make videos like this. So anyways, yeah, you don't need that. And I only trade, by the way, I only trade for like a couple minutes a day. Like in reality, I'm on stream in the Discord like every day for like an hour or two. But I always say like I don't have to be there. I don't have to do that. I just like helping people out and I like answering questions. So you don't need a ton of time. You don't need a ton of money. You don't need to risk a ton of money. You're not going to lose a bunch of money. You don't need a high win rate. You don't need a prop firm. Like, you don't need any of this shit. People just have it so backwards. So, yeah. And you don't need a bunch of indicators on your chart. So, let's start off with what you actually do need. Now, you do need this program. It does cost money. So, this program is about 40. No, I think if you use, like, my discount or whatever, I have some sort of discount code. It's, like, $25 a month, I believe. So, it's not bad. You don't need this to start off. You could use TradingView, but I don't like it. And you guys can see like all this stuff on the left is really why I use this. I mean, this stuff, like the chart here, viewing the chart is the same thing. But you'll see in a second. So let's just start. Let's put my camera over here because it's blocking this stuff. But you can see down here, like if I were to take this right now, EOSC, this is telling me exactly how many shares to buy, where to put my stop loss, and how much that is going to cost me. So that's very important. So yeah, this is a great example actually right now of what it is that I look for. So when I look at a stock, I'm looking at the daily chart. So on the left-hand side, I am looking at the daily chart. On the right-hand side, I have the 1 hour, the 5 minute, the 1 minute, and that's it. And then I have my alerts. So like whatever I set price alerts on, which we can see EOSC. I wasn't even paying attention, so I didn't buy this. But anyways, yeah, let's just look at that. So on the left, monthly, weekly, and daily. I have all these indicators set up for you. I'm going to give you guys the link to my layout completely for free. All you need to do is get this program, which is like, it's a lifesaver. It makes you so much money. You might as well get it. And then so it'll have all these indicators on. There'll be a document that shows you how to add this stuff on the toolbar, specifically average daily range percent. And what that is basically telling you on average how much does the stock move per day. So anything that's moving faster than 5% is exactly what I want. I want to see stocks that are making, that are moving faster than 5%. I want to be stuck in some slow-ass stock. So if we look at this, like, this made a 61% move in a couple of days. Let's go look at Apple. This thing made a 23% move. Like, what would you rather be in? The one making a 60% move or the one making a 20% move? And we can see Apple has an ADR of 5, while EOSC has an ADR of 10. So double the speed, a little more than double the move. This is a better stock. Anyways, where do I start with this? I'm gonna try to give you guys all the setups in this video. This is gonna be like a giant guide. I want you guys to take notes on this, study it. I don't know, if you want to make videos and be like, yo, what did I do wrong with this? Feel free to tag me in it. I'll help you out. Apply to your video, whatever. You can ask in the comments, whatever you guys want to do. So yeah, when I'm looking at a stock, I'm analyzing it on the daily chart. And what I look for is I look for strength in stocks. So I swing trade. I hold trades for multiple days. I am a trend follower, which means I'm waiting for a stock to make an initial move up, and then I buy it after it meets the criteria. So the actual criteria, let me see what I can pull up really quick. All right, so let me just read out the criteria really quickly. So the actual criteria for a breakout is going to be a big move up of 30% or more over multiple days to weeks, not just a single day pump. The 10 and 20 simple moving average inclining, an orderly pullback to the 10 and 20 simple moving average with higher lows and lower highs, which is a tightening range. Volume drying up as the stock pulls back, and then a breakout of that range on high volume. So let's take a look at what that looks like. Use BBAI. This is the most recent good example I can give you. And this shit is magic. When I saw this, I was like, oh my God, I know how to trade. Like, this makes so much sense to me. So what it is you have a stock that initially gains momentum. Now we can see right away this thing was putting in higher lows this entire time. Again, we're looking at the daily chart here. So this is very slow pace. You can come back and check on this after days, weeks. Like, it's not going to go anywhere overnight. So we can see this thing starts, gaining momentum. We're like, okay, slowly but surely, this is climbing up. It's putting in higher lows the entire time. Then it makes this initial burst. This is when I started to watch it. It made this move of 41%. Now, this right here is actually tradable, but it's not very good. So they'll make these moves up. They'll pull back to the 10 and or the 20. They'll hold the 10 and or the 20 moving average, and then they'll make another move higher. So we can see right here, this is the basics of like trend following. It makes this initial move up, pulls back to the moving average, holds the moving average very well. As it's holding the moving average, the volume should be lower, or it should be building a range, and then it breaks out on high volume. So we got that here, but this thing was just like already taken off. And then it started to continue to make this move higher. It pulled back very quickly to the 20. We can see, made another move up. Built this range, and I was like, oh, shit, this is a pretty good-looking range. Broke out this day, so I bought it this day. And it ended up just kind of like fading off. I made a little bit off this, but not much. So basically what I'm looking for is a stock that makes a big move up, pulls back to the moving averages. I want to see that the moving averages are inclining, so the 10 and 20. The best ones have them in order, so 10, 20, 50, and 200. But it's not always the case. Overall, what I'm looking for here is like this. This is the big picture. This tried to play out a couple times. Like, I thought, like here, just looking at this, I thought, this looks pretty good. It made this big move up, pulled back, built a range, put in higher lows, lower highs, tightened up a little bit, and started to break out and go higher. I was like, damn, this thing could just go right now. So I bought it. And I was like, oh, shit, it's working. Like up here, I'm like, this thing's going higher. And then it just quickly proved to me that wasn't the case. But then I actually didn't make money on this. So overall, this made this giant move up. I keep going in circles, sorry. Overall, this made this giant move up of 30% or more. The moving averages were inclining. And then it started to build this range here where we can see, it was putting in these lower highs right here and then these higher lows the entire time here. And as this range was being built, so the price is bouncing in between this range, tightening up. As this is happening, we see that the volume is slowly but surely dying out. And we can see that. So on volume, I have the 22 EMA, which again, if you just download my layout, all this stuff will be on there. But you can see, the volume is drying out as the stock is moving sideways. And then when it breaks out on very high volume. So that's what I'm looking for. I'm looking for a big move up like this. And then a pullback where it builds higher lows and lower highs. So it should look something like this. And then I buy it as soon as it's breaking out. So I'm buying it basically right here. Right? This is what I'm looking for. Now, what this is this is the trend continuing. So we have this initial trend, the stock gaining momentum. Then we have a stock pulling back. And we know that, this isn't just a pullback where this thing's going to fade and take a shit. The reason we know that is because it's putting in these higher lows. So every time this thing goes lower, it just gets bought back up. And it just goes higher. So it goes lower, gets bought back up, goes higher. So this thing, pulls back. It won't let me draw this freaking line, okay? This is essentially what happens, right? The stock ends up bouncing in between this little range right here, and eventually it breaks out, okay? Oh, my God. Can I delete these drawings? Whatever. So that is the basics of the setup. Now, identifying these can be kind of a challenge. But if you use that basic set of rules, you should do perfectly fine. If you can just stick to that and you can have good risk management and know when to buy and then know how long to hold and when to sell, you're going to do great. Like, you're buying stocks that are doing very well. So lately, the positions that I have bought are MSTR, PLTR, QSG, and Carvana. Now let's go over these. PLTR, this one's doing really good. So we can see with the market, what happened is the market's pulling back very, very hard right now. And that's not good. Like, we want to buy these things when the market's trending. So the main thing is for IXIC. So we can go to IXIC, which is CompQX, NASDAQ, whatever. We want to see that the market is trending higher. Now, what I mean by trending higher, how do you identify a strong market? The 10 SMA should be above the 20 SMA. So best case scenario is the 10 is above the 20, but stocks will start working before that, which is why I'm kind of buying some things now. I'm still very low risk. But we can see today the 10 is crossing above the 20. The market's starting to turn around, and this is going back into a short-term bull market. So when the 10 crosses below the 20, this is when it's a short-term bear market. Now, before that, like leading up to this, not too many stocks were working. There's a couple ones like BBAI. This was in February, so on February 4th all the way to February 19th. Now, if we look at the market, February 4th is going to be this day right here. February 19th is this day right here. So right when things started to turn around, we got that burst out of BBAI. Now, the market only went up 3%. BBAI, for example, went up about 130%. So trading these individual stocks, you can make a shit ton of money. And like I said, there's no Forex. There's none of that stuff. There's no futures. None of these are going to go up that much. Like, U.S. stocks have so much opportunity. And it's just so easy to trade them. Like, it's the easiest thing in the world. Let me see. Where did I leave off? Wow, I lost myself here for a second. It just, like, rambles through my brain. I don't know. But, yeah, anyways, I would go through these scans. So I'd go through 1 month gainer, 3 month gainer, 6 month gainer at the end of the day. And I would go look. I'd see, is anything starting to gain momentum? Like, this is gaining momentum, but the moving averages are shit. This is below the 200. This is gaining momentum, but it's a biotech. Again, I don't trade biotechs. I guess I haven't really mentioned that in this video yet. But I do not trade anything that says biotechnology. It's below the 200. Like, it's kind of a piece of shit. Like, all right, let me switch to the 3 month. There'll probably be better ones. CEP, like, this is gaining some serious momentum. This can start to build a range here. Looks like it's doing that right now. This is the way stocks act all the time. So we can see this big move up. It's pulling back to the moving averages here on the hourly chart. Let me move my camera. And you can see that as this is building this range, what's happening? The volume is dying out. So it's the same thing. Like, it happens all the time. You just have to know which stocks to do it on, which ones look good versus which ones look bad. And I'd say don't buy hourly setups. Like, you're better off buying these 1 day setups. So wait for this thing to set up on the daily chart, but wait for this to pull back a little bit, set up, build a range, and the 10 should catch up, maybe even the 20 as well. But let's go through and see if we can find anything else. Hertz, this is another good one. It started to set up on the hourly, but it didn't do anything. I think we're waiting for the daily chart. So it made this initial move up about 110%. Now it's starting to pull back, and the consolidation is starting to happen. There's nothing here yet, but we want to see the 10 start to go up, which it is. The 20 is going up, the 50 is going up, and the 200 is going up. So all these moving averages are perfectly layered in order. Now we just wait for this stock to pull back and give us that range where, like BBAI, it put in those higher lows, lower highs. This is another example we can use is DXYZ. This was a great one right here where this thing made this big move up, pulled back to the 10 here, made a little bit of a move again, but, there wasn't much of a setup here. This didn't consolidate much. You don't want to buy it off of this just because it hit the 10 and now it wants to go higher. There's no range here. The stock didn't tighten up. Give it some time. I let it play out and went a little higher, and I was like, fuck, is this thing just going to keep going? Wrong. What happened is exactly what, kind of we expected. So then it held the 10 here, and it just put in these higher lows the entire time. As this range was being built, the volume was dying out. So you can see that volume slowly but surely trickling down. And then right here, we have lower highs, higher lows. Next day, breaks out. So as soon as this thing's breaking out, I'm buying it. Stop loss goes at the low of the day. Always at the low of the day. Let me see if I can find really quickly. All right, let's just go over PLTR. So, oh yeah, I totally went off track. What the fuck am I doing? All right, so IXIC, right? We can see the market's weak. All these stocks are weak. this thing's going straight down. The market's going straight down. What's happening to PLTR? It's putting in higher lows. Like, sure, there was some chop here, but this was putting in higher lows. I actually can't believe I totally cut myself off and lost my own train of thought. And then it broke out this day. So this is the day that I wanted to buy it. I'm like, yo, this thing is so fucking strong. Look at this stock. It's been doing nothing but going up. People are like, oh, it's up too much. What are you scared of? The stock is up too much. Like, people said that about GameStop, way back here when it started to go up. Yeah, this thing's done. It's done. Boom. Goes up 2,400%. Like, get the fuck out of here. One thing you need to know about trading is a stock is never too high. Don't worry about that. Don't think like, oh, the stock is too high. Like, sure, you don't want to buy like something like you don't want to buy where's this shit? You don't want to buy like CEP. Like, you wouldn't want to buy the range here. Like, in this case, sure, the stock is too high. Let it cool off and let it sit down. But the price is never too high. The stock's not overvalued. Like, we're trading it. We're not analyzing this thing to hold it for the next 10 years. Like, Jesus. Anyways, so yeah, this is the day that I want to buy it as soon as it's breaking out of this range. So there's a couple examples. Now, I'll show you really quick with EOSC. So this one, we can see breakout level on this would be like right around here. So I would just use this previous day high as breakout range. So I would, delete this trend line. So I'd come around here, click right about there, right click, create a price alert, and this would pop up in my TC2000. And this would tell me, EOSC price alert set at 509. So as soon as that hits that 509, it's going to go beep, like super fucking loud. And it's going to tell me, yo, check out EOSC. And I'd buy it here. The second it's breaking through there, and my stop loss would go at the low of the day. So that actually did happen today. It beeped at this 509, 510 area. And I just didn't buy it. I don't know. I don't even remember what I was doing. I think I was at the gym or something. But I don't like when they break out later in the day like this. It's just kind of annoying. I like when they go right off the rip. Those are usually the best ones. These can do good, but not too impressive. So we can see later here in the day, this broke out. So if it's already, later in the day, just buy it as soon as it's breaking out and stop loss at low of day. Now, if it's something like PLTR, where this is breaking out, like it's already opening above the range, you're not just going to buy it. Like BBAI did the same thing. So this one, you see it, like the open price here was above the range. Like, you're not just going to buy it the second the market opens. Like, where do you put your stop loss? The candle hasn't even formed or anything. So what we do is we go to the 5-minute chart. You can use the 1 minute or the 5-minute chart for this. Now, the 1 minute is going to give you a better entry. You're going to have a tighter stop loss, but it could be more prone to failing. And you could have a lower win rate. And it's just a little bit faster. It's a little more challenging. If you have a couple stocks breaking out at the same time, it's like it gets a little overwhelming. So right here, this is this day, right? This is the first 10 minutes of market open. This is on the 5-minute chart. Now, what I would do is wait for the first 5-minute opening range candle. Now, we can see, now it's 9:35 my time, Eastern Standard. I'm in Florida. As soon as this high is then taken out of this candle right here, that's when we buy it, and our stop loss goes at the low of the day. So what this does is this creates a 2% stop loss, about like 2.06. Let's just call it 2%. Like, come on. So a 2% stop loss. Now, how much money can we put in this position? We can put 50% of our account in this position while only risking 1%. So we want to make sure that we're never risking more than 1%, because I don't want to lose more than 1% per trade. I don't think you should risk more than 1%. I mean, again, the win rate's relatively low. Our winners are very big. So our main thing is that we want to get good size, like good entries like this, where you have 50% of your account in a position, and it ends up being a market leader. So that's why you got to pay attention to these stocks that have good strength. You want to look for the best setups, and you want to know what to look for in stocks. So that's kind of what I'm going to show you in this video. But yeah, so as soon as this thing's breaking out, like if it's gapping above the range, you wait for the first 5-minute or 1-minute opening range high, and your stop loss goes at the low of the day. So in this case, it would be a 2% stop, which means you can safely put 50% of your account in this position while only risking 1%. So let's say I have a $10,000 account and I put $5,000 into this. If this goes down, it only goes down 2% and stops me out because I have my stop loss set, and that would be 5,000 times 0.02 equals 100. Oh, why is that backwards? But it equals 100. There you go. Simple math. And then on the left here, we have this risk calculator. So this will tell me exactly how many shares to buy, where the low of the day is, and then the dollar amount of position. So if you guys want to change this, right click, click edit, and make this first value whatever 1% of your account is. It should automatically be set to 1,000 because that's what I have it set at. Although my risk is more than that. But yeah, and then do the same thing on dollar amount of position. Right click, edit, change this first value. And that'll tell you accurately on breakout day. It's not going to tell you, like if I'm buying it here, that's telling me 113.05 as my entry. And my stop loss being the low of the day, which is 106.55. So we can see down here 106.55. So that would be like, it's basically telling me how much I can put here, calculating the difference. So this is a 5.76% stop. If I had 100K, I would put $17.6 thousand in this position, which even that's actually not that bad. But yeah, anyways, so where am I? I don't even know. That's crazy. All right, so as far as like looking for stocks, I also have this volume scan up here. And what I do with this is throughout the day, I keep the volume scan open. And I'll look at these things that are starting to gain momentum. So if I notice like a bunch of stocks in the same group are gaining momentum, like I see BBAI, you also see another one that's AI related. So this one, I like the momentum. It's meeting number one of the criteria, which is the big initial move of 30% or more, and the moving average is starting to incline. We can see that, This looks pretty good, like it's going on volume. It is running into the 50, which I don't like. The 50 is declining. It's below moving averages. This is a pretty weak stock, but in the past, like this thing's prone to making good moves. I think it just got really shit on by the market, so I think it's worth watching. It's made a 42% move in the past couple of days. So I'm like, all right, I'll pay attention to it. So I click on the little flag right here because this is my flagged watch list. So this, I click on there. It might say like U.S. common stocks, or it might say my name or something, but click here and change that to flagged items. And then you will see that this basically is your flagged list now. So any stock that you like from the volume scan, you'd put it on the flagged list. So my flagged list is kind of just what's starting to gain momentum. So we can go through here, BBAI. This is another one, SESAI, which I found on the volume scan. We can see that right here today. It's right there. And it's just another AI stock. I'm starting to notice that a lot of these AI stocks are starting to pick up. I mean, this thing's made, in the last couple of days, it's made almost 100% move. So I'm like, all right, I like to pay attention to that. It made the same move back here, kind of when BBAI was going. It didn't really do too much in February when BBAI did. But it is AI, so I'm like, a lot of these AI stocks are picking up. I want to look at them. And then we have like Lore, for example, like this is moving up. It started to pull back, but it didn't build that tight range. So there's nothing I could have done with it here. And then we have Reddit. It was just a strong stock in the past before the market pulled back. It took a pretty heavy hit. So I'm just watching it here because it is gaining some good momentum. It's up 25% or so in the past few days. So I'm like, all right, pay attention to it. CAR, this is the same as Hertz, so I don't really need that. It's a laggard. So if you have two stocks that are in the same group, so CAR and Hertz, those are industrials, rental, and leasing. Abbott budget group, and then we have Hertz, which is industrials, rental, and leasing. This one is the one making the bigger move. Focus on the one making the bigger move. If you have multiple stocks in the same group, focus on the fastest moving one with the highest ADR. So whatever's made the biggest move and has the highest ADR, that's the one you want to look for. So we can look at CAR. 8.74% ADR, and it's only made a 35% move, while Hertz has made like 120, whatever. So that would be the one I'd pay attention to. And I wouldn't buy two stocks in the same group. That just doesn't make sense. Sometimes, like that's very rare that I'll do that. Maybe if it's like, let's say there's 5 to 10 stocks and there's not really a clear leader, I'm like, all right, I'll take a shot at maybe 1 or like 2 to 3 at most. But I'll diversify my risk. So if I want to risk 1% per trade, I would risk 0.5% on one and 0.5% on the other, and the one that starts working or does better, I would add to that one and then get rid of the other one because then it's pretty obvious which one's leading. And I don't need to be in the shittier one. I want to be in the best stock possible. Because, I mean, if one of them stops out, they're probably both going to stop me out. So if I did 1% risk on both, that's basically 2% risk. Why would I do that? This doesn't make sense. But yeah, this list is going to consist of stocks that are initially making moves up. and that are like, you know, okay. I'm like, all right, I want to keep an eye on this. Maybe stocks I was keeping an eye on before this pullback. Some of them, you know, haven't been doing shit for a long time, but they went on good runs. And that's just kind of what I'm looking for here. And then on here, this is my focus list. So the stronger stocks that have been making bigger moves or are starting to set up, like EOSC. It's made a pretty decent move, and then it was setting up. And it looks like it started to go after, or like at the end of the day, which it's annoying. I don't really care about that. This was a very strong stock before the pullback, and it's not crazy. Like, I still think that PLTR was the best one. PLTR just held up the best. And then we have RR. This was a very, very strong stock, and it didn't pull back too much, like percent-wise. It pulled back a shit ton, but overall, like the structure of this, I'm like, okay, this looks pretty good, and it's been holding up for a while here during, you know, majority of this market pullback and all this shit, and now it's starting to make a move up. So I put it on my focus just because I like it. We have ACHR, of course, Hertz. We have Grawl. This one's making a crazy move. This is up 80%. It just looks very explosive the way this thing is reacting. It looks really, really good. Hertz, you know, again, a crazy move here from Hertz, 120%. Pony, this did make a crazy move. This was up 130%, but it took quite the shit today, so I don't know. I mean, also all the moving averages are declining, so not my favorite. This should probably be on the flagged list, if anything. But there's not too much right now that I'm really looking at. I mean, MSTR is one that I bought. We can see this kind of built a range. This is a little harder. I'm not even going to go over this trade right now. We can go over that later. PLTR, this was an obvious one, and this thing's working like a beauty. I showed you guys exactly how to do that. QSG, this is a little bit thinner of a stock. So a lot of people always ask, what do you mean thin? What I mean by thin stock is there's not much volume to it. There's not much money in the stock. But it made this big move up of about 180%, pulled back to the moving averages, put in these higher lows, and it just built like a pretty decent range overall. If I were to draw some sloppy trend lines here, it'd be something like that. And it broke out this day on decent volume. I mean, as this thing was going sideways, the volume was definitely dying out. And then this day was breakout day, and volume was good enough, so I bought it. And now it's continuing higher. So I bought it as soon as it was breaking through this trend line. I was actually a little bit later, so like more up here. And then stop loss at low of the day. And now it's going. So a successful breakout trade. Let me show you. Let's go back to the OG example. So a successful breakout trade, what we would actually do for this. So we have that. Let's just kind of like recap this. And then as far as like building another series on this, I'll have you guys ask questions. But this basically makes this big initial move up, right? Pulls back, puts in the lower highs, higher lows. It's holding the moving averages. As this is going sideways, the volume is dying out. Now we buy it here as soon as it's breaking out on the 5-minute or 1-minute opening range highs. And if it's something like EOSC where it's breaking out later in the day, obviously we're not going to use the opening range highs because it's not like already out of the range. But if it goes out of the range like right away, then just wait for that 1-minute or 5-minute candle to form, and then as soon as that high is taken out, that's when you buy it, and your stop loss goes at the low of the day. So exact same thing here. So you buy it on those 5-minute or 1-minute highs, stop at low of the day, and let's say you're risking $100 on this. You have a $10,000 account, you're risking 1%, $100, and on the way up, right, you're like, when do I sell some of this? You know, you kind of want to sell some to lock in some profits because it can be a little challenging. You might want to sell a lot, like when you see a winning trade, especially if you suck at trading and you've been on like a losing streak or you just don't know. So wait, and the rule for this is going to be sell 10 to 30% whenever you're up 5 times your risk. So let's say I risked $100 on this trade. Like most I'll lose on this is $100. When I'm up $500, which is going to be somewhere around here, I wait until the end of this day. So I don't just do it right when I hit $500. You can if you want. But let's say you see $500 on that trade right away. If you're going to do it right away, you would sell 10% of that position. Now, if I wait until the end of the day and I'm up like 7 to like 1,200 maybe, at this point, I would sell a little more. So that's why I give that 10 to 30% range because it depends on how much you're up at the end of the day. Obviously, if I say like, oh, right when you're up 5 times your risk, sell 10 to 30%, it's like, how would I know when to choose what? But it's because I wait at the end of the day, so that's when you choose based on that. So this one I was up a shit ton, so I sold more like 25%, 25%. I forget what I did. I think it was 25. It might have been 20 actually. But as long as you're up like more than 5 times your risk by a decent amount, then I would aim more towards the 20 to 30% mark. And then you move your stop loss from the low of the day to break even, which is whatever you bought it at. And then from there, that's when you would wait until this closes under the 10. You can sell a little bit more on the way up if you want. Like you see this thing keep going a lot higher. Maybe you want to sell another 5, 10%, but nothing significant. Wait until it closes under the 10 because sometimes these things can just keep going. And I believe if the market was good, this thing would have been, one of the really, really big trades. And I'll show you that here with INDO. So, INDO, we can see back here, right? This was just a single day pump, so it kind of defies the rules. But it was also gaining momentum before, and then it had that single day move. So this one was like gaining momentum overall, about 160% move up, pulled back to the 10 and the 20. Let's just zoom in a little bit. Pulled back to the 10 and the 20 here. It was right along the 200 as well. And then right here, we can see, I can't even show you the volume was like dying out. It's too low. But as this was going sideways, it was building higher lows, lower highs, and the volume was getting low. Obviously right here, it looks like there's no volume. And then this day a little bit, and then it broke out. So as soon as this broke out, using the 1 minute or 5 minute opening range highs, you buy it, let's say 523, stop loss at low of day, and you wait. And this was in a bad market too. But this thing went up, let's say you're buying it at 520 something. All the way to peak, this is up 1,565%. So imagine like initially early on day 1, because this was pretty good. Let's say maybe day 2, you decided I'm going to sell 30% because it's a red day. You're being a little pussy. Don't sell that much. Like if you're not up a shit ton, don't sell that much. And maximum you should sell is 30%. So at least you have 70% of your position in here. You see like this thing, you're like, oh, maybe this day you want to sell a little bit more. This is a little scary. I can understand why you do that here. So maybe sell like 10%. And then here, you're like, oh shit, green day. All right, next day. All right, red, like maybe this is losing momentum here. Maybe I want to sell it and time the top. Don't time the top. Wait for the moving average, please. You can see, puts in higher lows the entire time, right? Builds this little range here, breaks out again. So exact same concept. Big move up, pulls back, puts in higher lows, and it was actually going higher a little bit. And then it breaks out here. You wouldn't buy it this day. I did try to add to it this day, and I got fucked because it closed red. I got stopped out. But I still had my initial position, so it was fine. And then it just kept going higher and higher and higher. So from bottom to top, this thing made a 1,500% move in, 14 days? 13 days. Oh, it's actually 14. But, yeah, and then you sell the entire thing when it closes under the 10. And then we can see after it closed under the 10, not too much. The stock just went sideways and kind of like, honestly, just downtrended. So big move up, pull back, higher lows, lower highs, volume dying out, breakout on high volume, enter on the 1 minute or 5 minute opening range highs, stop loss at low of day, sell a portion of the position when you're up five times your risk or more. Always wait until the end of the day to sell, and then sell the entire thing when it closes under the 10. And again, if you want to sell more on the way up, you can. These are just very basic rules, so use your own discretion. But it's the same thing on every single setup. We'll go over to serve because this is one that I wanted to show you. It wasn't serve, it was sound. Silly me. This is one that I wanted to show you. So this is another one that almost looks like INDO. In a sense, like how those candles acted. This is one where it's a little tricky because this thing has not caught up to the 10 yet. But we can see, it started to gain initial momentum. Then it gapped up this day and put in higher lows the entire time. And it built this good range. Shit. It wasn't really putting in lower highs. It was honestly putting in higher highs. But overall, these higher lows here, and the volume was dying out, and it built this really tight range. Like this range is, obviously getting much tighter as time goes on. And then we get that big breakout on high volume. So as soon as this thing's breaking out, wait for those 5 minute or 1 minute opening range highs if you have to. And if it's, a couple minutes in the market open, then just buy it as soon as it's breaking out, and then the stock goes at low of the day. But if it's like ripping through right away, like at least wait for that first 1 minute candle to form, and then that high to be taken out just to get the confirmation that it is going to go higher, and it's not just like a pump off the open that's going to create a wick and then another thin day. But yeah, buy it as soon as this thing's breaking out so you can use the previous day high as a breakout point, or whenever it's breaking the range. Oh, actually, let's go back to that. And then same thing. So when you're up 5 times your risk or more, at the end of the day, that's when you're going to trim. Choose when to trim, or choose how much to trim based on how much you're up, and then sell the entire thing when it closes under the 10. And this is another one that acted really well that I wanted to show you guys, because you do need to know what it looks like when a stock is acting well. So I was eyeing this thing for a long time. Now, what I noticed here, a lot of people didn't see. I tweeted about this a couple times. I'm like, this thing's going to fucking fly. The entire time, what's happening here? A rectangle? Like, I don't want a rectangle. How do I delete that shit? You know what? Let's just do it like this. All right, so the entire time, this was putting in higher lows. And I'm like, wait a fucking minute. Like, hold on. This is one giant setup. I was looking at this, and I'm like, I'm going to be so rich. I'm going to buy this as soon as it breaks out. So I bought it here this day as soon as it was breaking out. And that happened. It barely went up and then closed under the 10. And I'm like, I was like, what is going on? But then that happened. And I'm like, oh, shit. Is this thing about to like take off without me? Right back down. I'm like, what is going on? And then this day, I'm like, oh, shit, I could have bought it here. And it's going up again. Now it's totally taking off without me. What happened? Would you look at that? Big move up. Pulls back to the 10 and 20. Volume slowly but surely dying out. And then this day, it's breaking out on high volume. So we bought it that day. When do we sell it? When we're up 5 times our risk or more, which was on this day. So we sold a portion of the position on that day. Moved the stop loss from the low of the day, now to break even. Oh, shit, this thing is really going. Never closes under the 10. Right, guys? Never closes under the 10 the entire time. So you can see this buy back here all the way up to here. It's not the top of the run, but, like, it's pretty damn close. I mean, this thing made a 265% move in a month or two. Or less than 2 months. This is, like, 1.2 months or something. And you can see when it closes under the 10, perfect exit. So a couple minutes before it's about to close under the 10, that's when you sell it. And we can see this thing just kind of dies off from there. But yeah, if you guys have any questions about that, there's probably something I'm missing out on. I do plan on making a full series. So like start to finish, like covering everything. Oh, and then let me show you really quick how I actually place my trade. How do I get... Okay, so if I were to be placing the trade on EOSC, for example, right? This is what it looks like on my desktop. So we can see here, this is the day that it's breaking out. Like as soon as it's breaking out, I would buy it. But for example, this is at 522. So let's say we're buying it a little bit late. Order type is at market. And then I would type in my quantity of shares based on what, remember, TC2000 tells me. So I go over here to TC2000. This is telling me down here stop loss is, wait, why is it not showing my mouse? Okay. This is showing me down here stop loss is 478, and it wants me to buy 2,439 shares, which is going to cost me 12.7K. So 2,400 shares about, stop loss at 478. So then I'd go back over here to Webull desktop, stop loss at 4.78, and 2,439 shares is what it wants me to buy. And I would have this, like this would be on the left-hand side of my screen. And then, because my monitor is giant, right? So I have TC2000 here, Webull, and Discord here. So I'm usually streaming when I'm doing this. I just tell you guys, like, yo, I'm buying this right now. And then I send it in the alerts channel too. And type out all the shit that I see, like, you know, how much I'm risking on the trade and exactly where the stop loss is. But yeah. So I would just type this in. And then I never click this take profit box. I only click this, wait, let me move my camera over. So I never click this take profit box. I only have the stop loss clicked. And then time in force here is day. There's no other option for that. Yeah, I just type in the shares here. Market order, of course, not limit, not stop limit. And this is the advanced order. This is the classic trade tab. And then right here, time in force, I changed that to good till canceled. Stop loss is right here. So this is telling me I would lose $999.99 if I were to be buying this here, and then it hits my stop loss. So make sure that this value never exceeds 1% of your account. So you can see it on TC2000 on the risk calculator, and then on Webull, just confirm that, or whatever your broker is. This is why I like Webull, because it's kind of like a risk calculator right here. It's telling me how much I'm going to lose, and then it places the buy order, so it buys it for me at market, and then places the stop loss order with it as well, so I don't have to go back and add the stop loss order. And then if I did want to sell it, I would have to cancel the stop loss order. So on here, it would show me like my position and then my stop loss order, like at the low of the day, basically. And then I would just cancel that. I would just click the X, and then I would sell it, and then I'd go back to the position, create a new stop loss, and put it at break even. So if I bought this at 522, then my new stop loss would be 522 after I take a trim when I'm up 5 times my risk. But yeah, that should be about it. Hopefully that clears things up. I know a lot of people keep asking me about that, like how I actually buy this stuff. I thought it was really straightforward, but guess not. Anyways, yeah, if you guys like this video, let me know in the comments. If you have any questions, let me know as well. And then if you want me to make a full series on this, like I can actually organize some shit, because I just be posting, I just be yapping. I like yapping. Let me know what you guys like. Do you like the yap videos, or do you like, you know, the coordinated, put together videos? Probably not edited, because I think that's like corny. But let me know what you guys like. Maybe I'll do like a whole guide and do like a whole breakdown and just yap for like 2-3 hours. I think you guys would enjoy that. I don't know though, so I'm waiting on you guys for feedback. Anyways, I will see you guys in the next one.